You know, we all pay for insurance, kind of hoping we'll never actually have to use it. But what happens when you do? What happens when disaster strikes and the company you've been paying for years just says no? Well, today we're going to pull back the curtain and dive deep into the playbook that insurance companies use to legally deny valid claims. And more importantly, we're going to give you the counter-playbook so you can fight back and win. First, you just have to understand the sheer scale of this. The insurance industry in the US is a $1.4 trillion business. That's trillion with a T. Now, their business model isn't some big conspiracy, it's just business. Think about it. They make money by collecting as many premiums as possible and paying out as little as possible in claims. The moment you file a claim, everything changes. You go from being a customer to being a liability on a spreadsheet. And understanding that fundamental shift is really the first step in protecting yourself. And this is really where it gets scary. I mean, last year, billions of dollars in legitimate claims were denied. For millions of people, the reason had absolutely nothing to do with whether they were actually covered or not. No, the denial often comes down to some tiny buried technicality, a single word you used on a phone call, or a deadline you missed by just a couple of hours. So in this explainer, we're going to hand you the playbook to navigate this whole system and come out on top. All right, here's our roadmap for today. First, we'll talk about the denial game so you can understand the core problem. Then we'll get into the adjuster's playbook. After that, we're gonna uncover 5 hidden traps they love to use. Then we'll get to the good stuff. We'll arm you with your battle plan to fight back. And we're gonna finish with a really critical warning, something you have to know. The clock is ticking. Okay, section 1, the denial game. You have to burn this into your brain. When you file a claim, you are not dealing with a helpful friend. You're entering a business negotiation with a massive corporation whose financial interests are on the exact opposite of yours. They want to pay as little as possible. You need to get what you're owed to be made whole. This fundamental conflict, well, it's the entire basis for the game. So, how do they play this game? Simple. They use the rulebook that they wrote. Your insurance policy. It's not some simple agreement. It's a 40, sometimes 60-page legal contract drafted by their army of lawyers, and it is filled with little tripwires they call policy exclusions and claims conditions. These aren't just details. They are the literal rules of a game they've designed to give them the advantage. If you miss a single one, they have the legal right to deny your entire claim. And those conditions I just mentioned can be absolutely devastating. Let me give you a real scenario. A homeowner in Texas has a pipe burst. Water is flooding his house. What's the first thing you'd do? The logical thing? You'd call a plumber to stop the bleeding, right? Well, that's exactly what he did. And then he called his insurance company. His claim for $18,000 was denied, flat out. Why? Because of a single clause buried in his policy that said he had to notify the insurer before making any repairs. He did the responsible thing, but he broke their rule, and it cost him everything. Now let's talk about the key player on their team, the insurance adjuster. Look, their job is not to help you. Their job is to investigate your claim with one main goal in mind: find a reason to reduce or deny your payout. From the very first phone call, they are trained professionals and they know how to use your own words against you. Here's another real-world example that'll make your skin crawl. A driver in Ohio gets rear-ended. The other driver's adjuster calls her, and she says what pretty much all of us would say: "I'm doing okay, just a little sore." You know, it's just a common, polite thing to say. But that call, it was recorded. Weeks later, as adrenaline wore off, she developed serious whiplash. But the adjuster used that one little phrase, "I'm doing okay," to argue her injuries were minor. Her final settlement was cut by 60%. Your words become their weapons. Okay, so now you've got the mindset, you know who the players are, let's get into the nitty-gritty. Section 3, the 5 hidden traps. These are the most common tactics and procedural hurdles that cause people who have done nothing wrong, to lose their claims. Knowing these is your first best line of defense. The first, and honestly the most common, is the recorded statement trap. Almost immediately after you report a loss, an adjuster will call and ask for a quick recorded statement. It always sounds so routine, so harmless. It is not. That recording is a legal document. It's specifically designed to lock you into a story, usually when you're still in shock or you don't even have all the facts yet. They are fishing for words like "I'm fine" or "I'm okay" or any little inconsistency they can use against you later on. The risk here is huge. A casual phrase you say in a moment of panic can literally devalue your claim permanently. But your defense is both simple and incredibly powerful. You have the right to say no, especially to the other party's insurer. Just use this exact phrase: "I'd like to speak with an attorney before providing a recorded statement." It stops them cold and it protects you instantly. Okay, trap number 2 is what we call the late notice void. Every single policy has a rule that says you have to report a claim within a reasonable time. But what's reasonable? Well, that's the trick, isn't it? Some policies define it as narrowly as 24 to 72 hours after the incident. So if you wait, maybe you're hoping the damage isn't that bad, or you're just overwhelmed, they can use that delay against you. They'll call it late notice prejudice and argue that your delay hurt their ability to investigate. And make no mistake, the risk here isn't just a reduced payment, we're talking about a total denial of your claim. Thankfully, the defense is unbelievably easy. Report everything immediately, even if you're not sure you want to file a claim. You can always call them back later and say you've decided not to proceed. What you can't do is go back in time and meet a deadline you've already missed. All right, next up, Trap 3, the Cooperation Clause weapon. Your policy requires you to cooperate with their investigation. Sounds fair, right? Of course you'll cooperate. But this clause, oh, it can be weaponized. Cooperation can be twisted to mean you have to submit to endless interviews, provide mountains of personal documents, or fill out really complex forms like a sworn statement in proof of loss under a super tight, unforgiving deadline. The risk is painfully simple. They can just bury you in paperwork, and if you miss one of their deadlines, they can argue you failed to cooperate and just void your claim. Your defense is to start thinking like a lawyer. Treat every piece of communication like evidence. When they send a request, you note the deadline immediately. Respond to everything in writing. You want to create a paper trail that they just can't argue with. Trap 4 is called the misrepresentation trap, and frankly, it's just ruthless. Here's how it works. The insurance company goes back and scrutinizes your original application for insurance from years ago. If they find any error, any omission, they can accuse you of material misrepresentation. For example, let's say you installed a home office but never updated your policy. If a fire starts in the kitchen, completely unrelated, they could argue that because you misrepresented the risk profile of your home, your entire policy is void. They'll claim if they'd known, they would have charged you more or maybe not insured you at all. It's a tactic that lets them cancel your policy retroactively, almost like it never existed. And finally, Trap 5, the independent medical exam ambush. This one applies to health or car accident injury claims. The insurer has the right to make you see a doctor of their choosing for what they call an independent medical exam or an IME. But here's the dirty little secret. That doctor is not independent. They are paid by the insurance company, and, big surprise, studies show these IME doctors side with the insurers at astonishingly high rates. The risk here is enormous. A single 15-minute exam with their doctor can be used to override months, even years of medical records from your own physician who actually treats you. Now, you can't just skip the exam because that can void your claim, but you can and you should defend yourself. Bring a witness with you. Take detailed notes about everything that happens. And afterwards, get a copy of that IME report and take it straight to your own doctor for a written rebuttal. You challenge their expert with your expert. Okay, we spent a lot of time talking about their playbook, all the problems, all the traps. Now for the most important part of this whole explainer. Section 4, your battle plan. You are not powerless in this situation. If your claim is denied or delayed unfairly, there's a clear, step-by-step process you can follow to fight back. Let's walk through this battle plan. Step 1, never ever accept a denial over the phone. You demand it in writing. This is so crucial because it forces them to state their exact legal reason, and that becomes key evidence for you. Step 2, from that moment on, document everything. Keep a log of every call, dates, times, names. Save every single email. This paper trail is your best weapon. Step 3, file a formal internal appeal. Your denial letter will explain how. This shows them you're serious and gives them one last chance to do the right thing. Step 4, if they still say no, go over their heads. File a complaint with your state's Department of Insurance. This is a free government service that regulates these companies, and believe me, they take these complaints very seriously. Step 5, for health claims, you have a powerful, federally protected right to an independent external review, where a neutral third party examines your case. And finally, Step 6, if they're still stonewalling you, it's time to bring in the pros. Consult a bad faith insurance attorney. Many of them work on contingency, which means you pay absolutely nothing unless they win your case for you. All right, let's move to our final section, and I really need you to hear this. This is a critical warning. You have all these rights, all these tools, but they all come with an expiration date. Time is absolutely not on your side here. This timeline shows a concept called the statute of limitations. Every state has a law that sets a strict deadline for how long you have to file a lawsuit over an insurance dispute. This window can be shockingly short, sometimes only 1 or 2 years from the date you were denied. If you wait past that deadline, you permanently lose your right to take legal action. I mean it. It doesn't matter how strong your case is, the door just closes forever. So the moment you feel you're being treated unfairly, that clock starts ticking. So here's what it all boils down to. Insurance companies have massive legal teams, massive resources, all dedicated to protecting their bottom line. But knowledge is power. By understanding the traps they set and knowing the steps you can take to fight back, you begin to level the playing field. You are not powerless. You have a playbook now too. So, I'll leave you with this question to think about. Has an insurance company ever denied your claim without what felt like a real explanation? What happened? Just thinking about that is really the first step to being prepared for whatever comes next. Thanks for joining us.